Pick the right options to trade in 6 steps. Options can be used to implement a wide array of trading strategies, ranging from plain vanilla call put buying or writing to bullish bearish spreads, calendar spreads, and ratio spreads, straddles, and strangles. Options are offered on a vast range of stocks, currencies, commodities, exchange-traded funds, and other financial instruments. On each asset, there are generally dozens of strike prices and expiration dates available. But these same advantages also pose a challenge to the option novice, since the plethora of choices available makes it difficult to identify a suitable option to trade. 6 steps for finding the right option. We start with the assumption that you have already identified the financial asset, such as a stock or ETF, you wish to trade using options. You may have picked this underlying asset in a variety of ways, such as using a stock screener, by employing your own analysis, or using third-party research. Once you have identified the underlying asset to trade, here are the 6 steps for finding the right option. 1. Formulate your investment objective. 2. Determine your risk-reward payoff. 3. Check the volatility. 4. Identify events. 5. Devise a strategy. 6. Establish option parameters. The 6 steps follow a logical thought process that makes it easier to pick a specific option for trading. Let's break down what each of these steps is. 1. Option objective. The starting point when making any investment is your investment objective, and option trading is no different. What objective do you want to achieve with your option trade? Is it to speculate on a bullish or bearish view of the underlying asset? Or is it to hedge potential downside risk on a stock in which you have a significant position? Are you putting on the trade to earn premium income? Your first step is to formulate what the objective of the trade is, because it forms the foundation for the subsequent steps. 2. Risk-reward. The next step is to determine your risk-reward payoff, which is dependent on your risk tolerance or appetite for risk. If you are a conservative investor or trader, then aggressive strategies such as writing naked calls or buying a large amount of deep out the money options may not be suited for you. Every option strategy has a well-defined risk and reward profile, so make sure you understand it thoroughly. 3. Volatility. Implied volatility is the most important determinant of an option's price. So get a good read on the level of implied volatility for the options you are considering. Compare the level of implied volatility with the stock's historical volatility and the level of volatility in the broad market, since this will be a key factor in identifying your option trade strategy. Implied volatility lets you know whether other traders are expecting the stock to move a lot or not. High implied volatility will push up premiums, making writing an option more attractive, assuming the trader thinks volatility will not keep increasing, which could increase the chance of the option being exercised. Low implied volatility means cheaper option premiums, which is good for buying options if a trader expects the underlying stock will move enough to put the option further in the money. 4. Events. Events can be classified into 2 broad categories: market-wide and then stock-specific. Market-wide events are those that impact the broad market, such as Federal Reserve announcements and economic data releases. Stock-specific events are things like earnings reports, product launches, and spin-offs. An event can have a significant effect on implied volatility in the run-up to its actual occurrence, and can have a huge impact on the stock price when it does occur. So Do you want to capitalize on the surge in volatility before a key event, or would you rather wait on the sidelines until things settle down? Identifying events that may impact the underlying asset can help you decide on the appropriate expiration for your option trade. Number 5, strategy. Based on the analysis conducted in the previous steps, you now know your investment objective, desired risk-reward payoff, level of implied and historical volatility, and key events that may affect the underlying stock. This makes it much easier to identify a specific option strategy. Let's say you are a conservative investor with a sizable stock portfolio and want to earn premium income before companies commence reporting their quarterly earnings in a couple of months. You may therefore opt for a covered call strategy, which involves writing calls on some or all of the stocks in your portfolio. As another example, if you are an aggressive investor who likes long shots and are convinced that the markets are headed for a big decline within 6 months, you may decide to buy out the money puts on major stock indices. 6, parameters. Now that you have identified the specific option strategy you want to implement, all that remains is to establish option parameters like expiration, strike price, and option delta. For example, you may want to buy a call with the longest possible expiration, but at the lowest possible cost, in which case an out-the-money call may be suitable. Conversely, if you desire a call with a high delta, you may prefer an in-the-money option. The bottom line: while the wide range of strike prices and expirations may make it challenging for an inexperienced investor to zero in on a specific option, the 6 steps outlined here follow a logical thought process that may help in selecting an option to trade. Define your objective. Assess the risk-reward. Look at volatility. Consider events. Plan out your strategy and define your options parameters. Congratulations for completing this course and moving a step closer to becoming a successful trader. You are welcome to visit our site, www.optiontradersnetwork.com, for more information, training, and strategy ideas. We would like to thank you for taking the time to watch the videos that we have put together for you today. Take a look and subscribe to our YouTube channel, our Instagram, our Facebook page, and reach out if you have additional questions. We would love to hear from you. Check out our website for more information. Go to www.optiontradersnetwork.com. Thanks so much.